Well, more good news on the home front. The S&P Case-Shiller Home Price Index rose for the third month in a row. Prices climbed 1% in August, following a 1.2% jump in July, but they are still 11.3% below the year-ago level. Now, on the plus side, that year-over-year decline is the smallest since January of 2008. Let's get some perspective right now on all of this. Let's bring in Bob Shiller, co-creator of the index. He's also an economics professor at Yale University and co-founder and chief economist of Macro Markets, sponsor of several home price futures and options products. Bob, good to have you back with us. We said at the beginning of this, more good news on the home front. Is it really, though, in your view?
Good question, Carol. We've seen a major turnaround, but the question is it sustainable? Is it because of the $8,000 tax credit or the sense of the bailouts that we have right now? And that's the big question. What's
your sense, though?
I don't know. We saw a pretty solid increase this month, 1.3% in 1 month, which you annualize that. That's good. We're up 5% since the bottom a few months ago. Annualize that, that's like a 15% annual increase. So it's moving at a really good clip up. We just don't know if this is real or not, whether it's sustainable.
Goldman Sachs economist Alec Phillips says that this is a false bottom. He says it's because of the programs that have reduced the number of foreclosed homes, the $8,000 first-time tax buyer credit, the Fed holding down mortgage rates. I mean, are you concerned about kind of a double dip here if that false bottom kind of falls out?
Absolutely. I actually think it's more likely. I'm in agreement that more likely that we're going to see this thing busting before next month. It'll probably still be up. The question is, how long will it continue? I honestly don't know. I said that before. My better guess is it will correct down, but it could. This could be a major turnaround.
Yeah. On the other hand, Bob, what about those animal spirits? I mean, here you have a housing market that's been tanking for for a couple of years at least, and then people say, hey, maybe this is the market bottom. We haven't seen prices this cheap in our area for a long time. Let's go and buy a new place.
Well, the stock market made a similar recovery over the same time. The bottom for the stock market was March 9th. Our bottom is in April in the housing. And the fact that it's over so many different cities, it can't be just the direct effects of the stimulus or the tax credit. I think it has something to do with the confidence, which until this morning anyway was improving.
Bob, help me out here, because I'm a little concerned, because you track the housing market, you track the markets, you've made some really great calls, but you're perplexed. So I'm just curious, does that mean at this point we should all be very cautious and suspect of kind of what's going on, whether it's the housing market or the equity run-up or the moves in commodities? Should we be suspicious of everything right now?
I used to be a quantitative forecaster of the indexes, and one thing I learned, momentum. That's the #1 thing. Forget about interest rates or affordability. Don't forget about them, but they're not as big as momentum. But right now, the momentum has just changed so suddenly that it seems like we're in a different world. So I can't be a statistical forecaster now, because it's just violating what I've learned about the data. So it leaves me perplexed.
You mentioned interest rates, and our last guest said he's bullish until the bill comes due, which will show itself in the form of higher rates on treasuries, higher mortgage rates, etc. Do you expect to see that coming up in 2010? I mean, I know you were a big buyer of TIPS last year. They had a good run up.
Well, it's very hard to predict longer-term bond rates. I mean, the Fed is likely to be raising interest rates at some point, but short rates. But what that translates into, it's tough to predict.
Bob, let me ask you one thing when it comes to the housing market, and I think we've discussed this before. I mean, as prices start to go up, those disillusioned home buyers who maybe took their house off the market are saying, well, maybe now it's time to sell. If they've had that option to kind of keep it off, that has got to then ultimately put pressure on prices again. So maybe we shouldn't be surprised if prices back off of these levels.
It's exactly analogous to the stock market. People say Dow 10,000 is a resistance level, right? You have people decide, well, I'm going to sell when it gets back to that. Same thing could be happening with housing. It's all speculation. It's animal spirits and speculation which dominate most of the other things that are more concrete.
All right, we do have to run. Bob, thanks so much. Professor Bob Shiller of Yale University.